The biggest macroeconomic feature of the week will be the latest UK inflation figures. They're due out on Tuesday the 18th of September. The Bank of England, it's already made its interest rate decision for this month on Thursday the 13th. But the numbers could set, perhaps, the tone for the two remaining Monetary Policy Committee meetings of 2018. They take place on the 1st of November and the 20th of December respectively. Remember that the bank's mandate is to keep inflation around the 2% mark, but in July inflation was higher than that. Weakness in the pound and renewed strength in oil could keep Governor Mark Carney's colleagues on their toes as well, but they may be inclined to look through those, and it may be any sustained acceleration in wage inflation that has them planning the next interest rate increases. We can see the trend in inflation since early 2014 right here, and the headline figures from last time around, by way of comparison, were as follows. Consumer Price Index inflation, or CPI, was 2.5% year on year. Retail price inflation, or RPI, was 3.2%, while CPIH, the bank's preferred measure which includes housing costs, was 2.3%. Now, on the company front, we've got 4 FTSE 100 firms set to publish results or host their annual general meeting, with a number of mid and small caps doing the same. They include Pubs Group Mitchells and Butlers and Dairy Crest on Monday the 17th of September, Insurance and Travel Group Saga on the 18th, Support Services Specialist Babcock and DIY giant Kingfisher on the 19th, Diageo on the 20th, and Engineering Conglomerate Smiths Group on Friday the 21st. But for me, the stock most likely to cause a fuss in the week ahead is online grocer and FTSE 100 member Ocado. It's due to release a third quarter trading statement on Tuesday the 18th of September. Now, if ever there was a Marmite stock, if you'll pardon the pun, this is it. And in 2018, fans of the stock have completely had their way with dissenters. Bears, they argue that Ocado is just a barely profitable online delivery service that will never make enough money or generate enough cash to justify its £6.6 billion market capitalisation. Bulls, they say that Ocado is not just an online grocer, but a software giant in the making, thanks to its expertise in online transactions, warehousing and logistics. And deals to license out Ocado's technology to Groupe Casino of France, Sobeys of Canada, ICA of Sweden and Kroger of America in the last 12 months, adding to an existing relationship between Ocado Solutions and Morrisons, well, they've seen the bullish argument prevail, for now at least, with the shares going into orbit, as we can see here. A further reason for this meteoric rise is a squeeze on short sellers. Those investors who borrowed stock and sold it in the view the share price would go down, so they could buy the shares back, pocket the difference as a profit, and then return the shares to the original owner. Now, as the share price rose, more shorts were squeezed and had to buy back. That took the shares higher still, forcing more shorts to buy back, and so on and so on. According to shorttracker.co.uk, more than a fifth of Ocado's shares had been sold short in early 2016. That figure is now barely 2%. Based on publicly declared positions, the shorts have basically been destroyed. But what that does mean is the shares now need new buyers to keep on going up. And intriguingly, they've just dipped back below £10, possibly not helped by the news that Chief Executive Tim Steiner has just sold 9.7 million shares for just over £100 million. 2 more executives have sold just over £17 million worth of stock since June. This all makes the timing of the third quarter trading statement particularly interesting. Ocado doesn't give profit numbers at this stage, but there are 4 sets of data for investors to chew over. The first is retail sales. This excludes Ocado Solutions, the licensing business unfortunately, although at the first half stage that business had sales of 63 million against retail's 737 million. Here we can see the trend in retail over the last 4 or 5 years, and in the first half sales rose 11.7% year on year. So that's our benchmark for Q3. Second number to watch is average number of orders per week. That figure's risen consistently, and in the first half it was 291,000 against 260,000 a year ago, for a year on year gain of 11.9%. Thirdly, we come to average basket size. That slipped very slowly over time to just over £108, although even there the rate of decline has eased of late. And finally, analysts are looking at the balance sheet. Ocado raised over £300 million in fresh capital from investors in the first half via 2 placings, and it ended the period with net cash of £72 million, including lease obligations. Strategically, analysts will be homing in on 3 things. commentary on the volume ramp up at its Andover and Erith sites in the UK, Ocado's third and fourth so-called CFCs or Customer Facilitation Centres, a progress report on the relationship with Morrisons, and then updates on the international licensing deals, particularly the one in France, where Groupe Casino and Ocado have just begun work on the first logistics site, or CFC. Thank you for watching, and I look forward to seeing you next time.